I'm Jim Pierce with Baton Investing. Every day, people like you come to us when they realize that their current investment approach just isn't working. We give them an easy-to-use system that has beaten the S&P 500 by more than 300% since 2003, takes just 30 seconds a month, and most importantly, will help you achieve your financial goals. Today we're recommending a company called AUO Optronics, and they make the liquid crystal display screens that you see on high-def TVs, smartphones, PC terminals, monitors rather, laptops, and even solar panels. It's a huge growth industry that has no end in sight, and it's rare that a company with this much upside potential can be bought so inexpensively. Right now it's only a $5 stock, and we think its share price could easily double over the next couple of years. And here's why. Because not only is it cheap, it also earns a perfect score of 100% from our investment strategy based on the book market investor methodology of Joseph Piotroski. Now, you may not have heard of him. He's actually a college accounting professor, and think of like the geekiest accounting professor you ever had or could imagine. That's this guy. But he's great at what he does. In fact, he's become legendary on Wall Street for his ability to examine financial statements to find companies that are worth more than their current share price suggests. So based on Piotroski's approach, here's why we think AUO is on the verge of taking off. So we're talking about AUO Optronics, symbol AUO, and again, this is based on the book market investor methodology of Joseph Piotroski. And basically what that means is, and again, remember this guy is an accountant. He wanted to see a company whose book value, which is essentially based on balance sheet figures, that are greater than the market value of the company. That is, the value at which the stock market is placing on the company based on its share price times the number of shares. So anytime that's in excess of 1, he feels like that's a company that's cheap. In other words, it's worth more than what its share price is telling you. And in fact, in this case, its book-to-market ratio of 1.06 puts it in the top 20% of all stocks trading on the U.S. market. So that was the first requirement that Piotroski had. But then he wanted to make sure that this company was cheap for a good reason and not because it was being mismanaged. So he also wanted to see a positive return on assets, and in this case, for AUO, that's a positive 3.67%, so it passes that test. He also wanted to see positive cash flow from operations, and last year AUO had over $2 million in positive cash flow, so it passes that test. And finally, he wanted to see an increase in its current ratio. Now, current ratio compares a company's current assets to its liabilities over the next 12 months to make sure that this company has enough money to pay its debts. And he wants to see it increasing to see that this is a company that's getting stronger, not weaker. And in this case, last year, it had a current ratio of 1.07 compared to 0.94 the previous year. So it is increasing its current ratio. So here's a company that's sitting right in the middle of a huge growth industry. Its stock price is only $5, and according to Piotroski, it's worth more than that just based on its book value. We think it's a buy up to $6, which, keep in mind, is 20% higher than its current price of $5. But if it does go to, say, $9 a share, that would be a 50% increase just over the $6 price. So you can buy 100 shares of the stock right now for only $500. We think it's a really good find and a stock that's in our portfolio right now. Now, AUO is one of just 10 stocks that we currently hold, and every month we do the same kind of exercise on over 6,000 stocks to pick out the 10 that score the highest. So AUO may be in our portfolio next month, or it may not, but it's still a great company. And if you want to find out more about how we go about identifying these companies, visit batoninvesting.com and click on how it works. There's a simple 3-question assessment you can take to determine if Baton is right for you. Now, we can only help about half of the people who come to us, but maybe you're one of them. So go to batoninvesting.com now, and I'll see you soon with another free stock tip. Thank you.